If you're a veteran buying new construction, there are 3 traps that can cost you thousands and 5 smart steps that can help you avoid them. The builder will make it sound easy. Big incentives, special financing, closing cost help, low rate signs everywhere. The second you say you want to use your VA loan, the pressure starts. VA is harder. VA takes longer. You should really use our lender. That is where a lot of veterans get pushed into a wrong deal without realizing it. So in this video, I'm breaking down the 3 biggest traps when using a VA loan on new construction and the 5-step strategy to help you structure it the right way. VA is not the problem. A bad structure loan is. I'm Cathy Sabater, mortgage strategist and proud veteran. Trap number 1, builders want control. A lot of veterans think builders push back on VA because they don't like VA loans. That is usually not the real issue. The builders resist uncertainty, outside control, and anything that changes their preferred process. When you use the builder's preferred lender, they often control the financing, the title company, the escrow process, the timeline, and communication. That is easy for them. That is predictable for them. And it is profitable for them. When you bring in your own VA lender, now there's an outside variable. Now they're not in control of the entire process. That is where the pressure starts. Not because VA is weak, usually because the builder wants the deal to stay in-house. Once you understand that, their behavior makes a lot more sense. Trap number 2, the incentive trap. This is where buyers get distracted. You walk into the model home and you see signs like $20,000 towards closing costs, special low rate, free upgrades, move-in ready financing, and it looks amazing. But here's the catch. Those incentives are usually tied to a condition. You must use the builder's preferred lender. That is where you need to slow down. Free money is often not free. A builder can offer a big incentive up front and make it back through a high interest rate, more discount points, higher lender fees, or additional closing costs. So yes, they may give you something today, but you may end up paying for it every month. That is the real trap. Buyers focus on the headline. They react to the incentives. Veterans need to compare the total cost of the loan. That is how the wrong deal wins. Trap number 3. This is the one that worries me the most. A lot of VA buyers hear 0 down and think their cash is protected. But with new construction, a builder may ask for a large earnest money deposit to start building your home. So yes, you may be using a VA 0 down loan and still have a lot of money at risk. That is the trap, because builders' contracts are written to protect the builder first. If something changes with your income, financing, payment comfort, rates, or value, the builder may be holding on to your deposit while you're holding on trying to figure out the next move. So 0 down does not mean 0 risk. Not if you handed over a large deposit on a house that is not finished yet. That is why you need a strategy before you sign anything. 5 steps a veteran should follow on a new home build. Step number 1, and that is to get your financing reviewed as thoroughly as possible before you start negotiating with the builder. A lot of buyers think a pre-approval means they are fully ready. A quick approval letter is not the same as having your income, assets, credit, Residual income reviewed in detail up front. That stronger review makes you a more serious buyer. It helps reduce uncertainty. It removes one of the builder's biggest objections before the conversation even starts. Step number 2, have your lender call the builder sales rep directly. A real conversation builds confidence more than a pre-approval letter sitting in someone's inbox. The representative needs to hear that your file is strong, the timelines is realistic, and the VA is being handed by someone who knows how to close it properly. That confidence can change how the builder treats the deal. Ideally, that call is coming from me. Step number 3, compare the payments, not just the incentive. This is where the real math shows up. The question is not just what credit is the builder offering. The question is, what will this house cost me every month? A builder may offer a bigger upper incentive. However, that does not automatically mean it's a better deal. And depending on how the financing is structured, it can still lead to a high, longer term cost. An independent VA lender may offer a different structure that can result in a lower payment and overall better math. It all depends on the loan terms. Same house, different payment. That is the comparison that matters. Compare total costs, not just the incentive. Step number 4, watch the contract terms closely. This is where buyers can get hurt fast. A builder contract tells you, hey, exactly who's protected if something goes wrong. Many times it is the builder, not you. So before you sign, you need to know what the contract says about your deposit, the timing, appraisal protection, financing language, and what happens if the deal changes, especially if the deposit is large and non-refundable. Because once that money is committed, you need to know exactly what could be lost. That is why reading the fine print is not optional. Step number 5, make sure the home is actually ready to close. Do not assume a new construction is automatically ready for a VA loan because the builder says it's almost done. That is how buyers end up at the delay at the finish line. The house has to be fully ready for the loan, the appraisal, the final walkthrough, unfinished exterior work, grading problems, missing a driveway, incomplete items that the builder said would be done. Those small issues can turn into closing delays, last minute stress, and a deal that suddenly feels unstable right when you thought you were done. So solve that problem early. Set expectations with the builder before you get close to closing. Make sure everyone is clear on what has to be finished, when it has to be finished, and what could delay the file if it is not done. The goal is to find out now, not before, because you need to make sure that the house is ready. You want to avoid that surprise completely. Bottom line, if you're a veteran buying a new construction, VA is not the problem. The real risk are the builder's control, bad incentive math, and deposit risk. Do not assume that the builder's lender is your best option. Do not assume that the biggest incentive is the best deal. Do not assume a polished sales pitch meets the math in your favor. The way you protect yourself is with structure. That is how you stay in control on a new build. Next week, we're staying on the same theme of your VA benefits strategically because VA loan assumptions come with opportunities, but they also come with traps. Can you really take over someone's low interest rate? Sometimes yes, but there are some major mistakes and sellers make, especially when it comes to entitlement. So if you are buying, selling, or trying to use your VA benefits strategically, make sure you subscribe. I'm Cathy Sabater. Thank you for your service, and I look forward to seeing you on the next one.